Cryptocurrency. Everyone's talking about it, and for good reason. It's not just a buzzword anymore, it's a global phenomenon that's changing the way people think about money, investment, and even technology itself. It's a digital gold rush, with stories of overnight millionaires fueling the hype. Social media is filled with tales of people striking it rich, and the excitement is contagious. What makes crypto so appealing? Accessibility. Unlike traditional finance, you don't need a broker or a big bank account to get started. Anyone with a little cash and an internet connection can join in. The barriers to entry are lower than ever, making it possible for almost anyone to participate. People are chasing the dream of finding the next Bitcoin, hoping for explosive growth. The idea of turning a small investment into a fortune is incredibly tempting. The market is fast, open 24/7, and feels like a modern treasure hunt. There's always something happening, and the action never really stops. But for every big winner, there are plenty who lose money. The risks are real, and fortunes can change in an instant. Prices swing wildly, making it both exciting and risky. The thrill of big gains comes with the fear of sudden losses, keeping everyone on edge. Unlike traditional investing, crypto never sleeps. Opportunities and dangers are always present. The market's constant motion means you have to stay alert. It's not just about getting rich quick, it's about being part of a new financial frontier. People are drawn to the sense of innovation and community. But before you dive in, it's crucial to understand what you're getting into. Education and caution are your best friends in this fast-moving world. The potential is huge, but so are the risks. Every decision counts, and the stakes can be high. Let's break down what makes crypto different, and what you need to know before you start. Whether you're curious or ready to invest, understanding the basics is the first step. Is crypto just like stocks? Not quite. While both are ways to invest and potentially grow your money, they're fundamentally different in how they work and what you actually own. When you buy stocks, you own a piece of a real company. Buildings, products, profits. Your shares represent a claim on the company's assets and earnings, and you might even get voting rights or dividends. Crypto is digital, tokens on a blockchain, not tied to any company or government. Instead of owning part of a business, you own a digital asset that exists only online, secured by cryptography. The market never closes. You can trade any time, day, or night. Unlike the stock market, which has set hours, crypto is always open, making it accessible to anyone, anywhere in the world. Volatility is extreme. Stocks might move a few percent in a day. Crypto can swing 20%, 50% or more. Prices can skyrocket or crash in minutes, making it both thrilling and risky. Big profits are possible, but so are big losses. The potential for rapid gains draws many in, but the risk of losing it all is just as real. Regulation is another key difference. Stocks are heavily regulated. Crypto is still the Wild West. There are fewer rules, and oversight is limited or still evolving in many countries. There's less protection, so you have to be extra careful. If something goes wrong, there may be no one to help you recover your funds. For some, the lack of rules is exciting. For others, it's scary. The freedom comes with responsibility and risk. Crypto is a free market, but it means you're responsible for your own safety. You have to protect your passwords, wallets, and accounts from hackers and scams. Do your research, and don't expect the same safety net as traditional investing. Understanding the risks and rewards is crucial before you put your money in. The stakes are higher, and so is the need for caution. Every decision matters, and being informed can make all the difference. Know the differences before you jump in. Take your time, weigh your options, and remember, in the world of investing, knowledge is your best defense. To get started, you need to know 3 basics: coins, exchanges, and wallets. Coins are the cryptocurrencies themselves. Bitcoin and Ethereum are the big names, but there are thousands of others. Exchanges are where you buy and sell coins like Coinbase or Binance. Sign up, connect your bank, and you're ready to trade. Once you buy, your crypto goes into a wallet. Hot wallets are online and convenient for trading, but more vulnerable to hacks. Cold wallets are offline, like a USB stick, safer for long-term storage. Use hot wallets for small amounts, cold wallets for serious holdings. Your starter pack. Pick your coins, use a reputable exchange, and store them safely. It sounds technical, but it's easier than you think. Security and smart choices are key. Here's how it works. First, you'll need to deposit money into your exchange account, which is usually as simple as linking your bank account or using a credit card. Most exchanges make this process quick and secure, so you can get started right away. Once your funds are available, you can browse the platform and buy the cryptocurrency you want with just a few taps or clicks. You don't need to buy a whole coin, just invest what you can, even if it's a small amount. Many people start with just a few dollars. The exchange automatically calculates how much crypto you'll receive, even if it's just a fraction of a coin. Click buy, and just like that, you're officially a crypto owner. Your new assets will appear in your account instantly. When prices rise, you can sell your crypto for a profit. This is how many traders make money in the market. But if prices fall, you might lose some of your investment, so it's important to keep an eye on the market. Selling is as easy as buying. Just click sell when you're ready, and confirm your transaction. Your crypto instantly converts back to cash, which you can withdraw to your bank account, or keep on the exchange for future trades. You can also reinvest in other coins, exploring new opportunities as the market changes. The goal is simple: buy low, sell high. This basic principle guides most successful traders, but remember, prices can drop just as fast as they rise, and the market can be unpredictable. Every trader faces tough decisions: should you hold on and wait for a rebound, or cut your losses and move on? Emotions can run high during these moments, so it's important to stay calm, stick to your plan, and avoid making impulsive choices. That's the basic cycle of crypto trading: deposit, buy, hold, sell, and repeat as you learn and grow in the market. Making money in crypto isn't magic, it's strategy. The simplest way is hodling. Buy and hold for the long term, betting on future growth. Swing traders buy low, sell high over days or weeks using charts and trends. Day traders make quick moves, aiming for small profits, many times a day. High risk, high stress. Some hunt for undervalued altcoins, hoping to find the next big thing. Big gains are possible, but most altcoins fail. Research is everything. Don't just follow hype. Each strategy has its risks and rewards. Patience, knowledge, and timing matter most. There's no guaranteed path to riches. Success comes from smart choices, not luck. Before you start, remember, only invest what you can afford to lose. The crypto market is volatile. Never risk money you need for essentials. Start small, treat it as a learning experience. Always do your own research. Don't trust random tips or hype. Understand what you're buying and why. Security is crucial. Use strong passwords, enable two-factor authentication, and store long-term holdings in a cold wallet. In crypto, you're your own bank. Protect your assets. Volatility and scams are real risks. Stay alert. Keep learning. Crypto changes fast. Follow reputable sources and keep building your knowledge. Be patient, start slow, and focus on learning, not just profits. The smartest investors play the long game. Good luck, and trade smart.